The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 28th day of March, just about to wrap up the week, just about to wrap up the month. Very interesting. We'll go through these prices right now. The E-minis down 5 at 26.10. Made that arch formation after the peak D, January the top 29th at 28.83. Peak D is the fourth highest peak in the Chapman wave. You merely count each successively higher peak after identifying the most obvious low bar. The most obvious low bar was from 28.83 down to the 25.32 level. Starts to rally, goes peak A, peak B, peak C in the daily, goes to D at 2807.25, pulls back, and the arch formation, which we've been talking about for a long time, has been not yet fulfilled. 25.86 was the low that was made a few days ago, and we right back down here. We're at the 26.11, trying to rally, trying to get off the low. The stochastic is really a very poor pattern right now, 16%. If it can, in the next 2 days, jump to 23%, somewhere around there, that'll say, oh, very nice. Now we can have a decent bounce. Until that happens, just a flat sideways market. The H pattern in the weekly chart is what we're looking at here. Made a peak D in the 120-minute chart as well. D in the daily twice. D in the weekly. D in the 120-minute chart yesterday at 2679.75. That big rally that went up and then plunged to the downside. And now we've been testing this down. Chapman wave inside wedge target line, target support line. And it's held it so far. Trying to bounce with the 9-period moving average. I said to subscribers to my opening call, my daily, very intensive newsletter, that 26, at that point it was 26.18, 26.19. That's the 9-period moving average that it needs to pierce to be able to break to the upside. We'll see if it's going to be able to do that. Let's get out of this 120-minute chart, go to the nitty-gritties of what we're looking at right now, because it is in such an important period. I'd call it a phase more than a period. Look, here we go. Dow, INDU. Dow is up 63 at 23,922. Daily chart, 26,616 peak D high in the Chapman wave back on the 26th of January. Chapman wave 2-bar reversal, one of the techniques, the myriad techniques that I've developed. Plummets down to 23,360 on the 9th. Makes an arch formation, goes to peak C minus because it's come all the way back. Testing the 200-period exponential moving average 4 days ago, trying to bounce off it. It should find some support. I'm just looking for another arch and then a failure pattern. We've been short the Dow for quite a while. Peak E in the weekly chart, H formation, and a peak E in the monthly chart. And that, to me, is the most important thing because we have a Chapman wave Roman candle from last month. And so far, it looks very much like we will be testing the 23,360 low that was made in February sometime between now and April. So certainly probably the first week of April, if it's going to do that at all. The S&P, let's get to that, SPX.X, oops, .X, there we go. Peak D in the monthly chart, Roman candle. Peak D in the weekly chart, very sharp pullback, arch formation. Peak F, and then a peak D in the peak F on the 26th of January. So this is always so fascinating to me. Tops are made over a period of time. Lows are made in unison, almost within days of one another. You make some kind of ictus at the bottom, and you start a big rally. So that's the reason why we're looking at the last of the fabulous sectors starting to break down. We'll go to that in a moment. So we've got the S&P just off the 200-period moving average of 2617, up 5. We'll see if it's able to get to the 2658 9-period moving average sometime this week. We've only got a day and a half. So then we're going to want to go to the, here we go, the QQQs. QQQs down 53 cents. This is the best of the best. Now, one of the weakest sectors. The QQQ's Power Share Trust Series NDX 100 down 50 cents at 158.61 in a leg C to the downside, trying for the Chapman Wave inside wedge support line, which comes in right at the 200-period moving average of 153.65. That makes this a very critical period. Why? Because the weekly chart is gone. The daily is in a sell mode, like the other indices, and the weekly is in a sell mode as it stands right now, with a high of 175.21. And as you can see, that for subscribers, we've been short since about $1 off the top. At least we've got a little comfort factor here, because any bounces, I believe, will fail. But if you are short from lower down, it makes you very vulnerable to getting stopped out. So that's why timing is absolutely imperative, why I use the Chapman Wave methodology to attempt to pick bottoms and pick tops. So here we go. We're going to the IWM. IWM at this point is up 26 cents. Made a peak E in the daily the second time round. First time round was a peak F. It's a double top in the 160 area, trading at 150 right now. 148 is the 200-period moving average support. What's really important about this is you've got another arch formation in the weekly chart. And look at this in the, if I can just squeeze it a little bit, you've got a peak E forming, and the monthly so far is holding above the 9-period moving average. I want to go to gold, because gold has been pulling back. It's down 14, I believe. Yeah, 14 right now, 1333. It failed to rally as sharply as it should. It's in a trading band between the 1360s and I believe the 1320s. If it closes under 1320, that suggests that the 1314 9-period moving average in the monthly chart and the 1304 level then in the 200-period moving average of the weekly could become targets. So we're going to be watching this very closely, because the dollar was holding okay yesterday. Today it's up a little bit, but it's all within a trading band. You know, gold is actually also within a trading band, as is the dollar. So we're going to be watching that. Now, I want you to just quickly go to crude oil. Let me show you. So I heard Tommy Jr. give out the update at noon. Oil has made a peak D top, a double top basically, and is pulling back. It's gone to a fractional new high in the weekly chart. It looks like it wants to try at some point to get to the 67.40s, the 200-period moving average in the weekly. But what I really wanted to show you was Tommy was talking about oil, so I went to the USO. So the USO made that peak D just as crude oil has, because I think most of you can. Maybe you don't get the futures or the continuous contract, but you do get USO. USO is the United States Oil Fund, and look what's happened here. It's to the penny at the previous high, and it hasn't broken out. It just needs to go 1 penny above 13.30, and that starts leg D in the weekly chart. Finally, you've got your D, so you've got your D in your daily as well. So that's that. So we're talking about Amazon in the den. Amazon made a peak D. Not only did it make a peak D at 17.54 on the 13th, the very next day it had an open. It opened at a round number 1597, and then the following session it had a round number of 15. I think it was 70-something, 1595. And that to me, that's just the kiss of death. That just says, wow, at least short term, those are the numbers you need to look for to break to the upside to be able to say we've recycled higher. At this point, I think this peak D in Amazon is saying, hey, it's now finally joined the others in consolidating in the FANG stocks. I'll be right back. We'll look at the TLT. Basil Chapman, Dow's up 140.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, so we're back. I was asked about Square, which is Square Inc. It's trading down 3 at 47.76. What's the wave count in the weekly? I've got an alternate count here, F/C, and the only reason I've done that is because the peak G that I've got in the daily chart has every characteristic of a pretty serious sell mode. We did try to go long it the other day, took a fairly small loss in a position, but it was more an experiment to see if there would be a test of the weekly chart. But once it broke down, I'm not even looking at yesterday, I'm looking at the day before. Under the 9-period moving average, I said, this should be consolidating. So I'm looking at the leg E in the weekly, and that's the thing about the high techs. These high techs have been, the way I can put it is this. When you're looking at the cycles, the areas and the sectors that take the longest to make their top, they're the ones that last the longest. They're the ones that everyone just throws up their hands and gives up and says, I'm not shorting these things again. This is impossible. Well, we've got, for instance, in the XLK with a high at 71.34 peak E on the 13th of March and a peak D in the weekly. And I've got a leg C in the monthly, but I'm going to do this because I'm convinced that everything about it has the look of a D. That there was a potential for a phantom peak just a few cents away to go to a peak C, a phantom peak C in the Chapman wave. 47.97 was the high in the XLK in September of 2016. 47.97. The very next month is 48.06. So that is what, 11 cents, 9 cents. I'm prepared to consider that that's a phantom peak C, and this really is a D right now. Remember, the Chapman wave, you want to be as conservative as possible, and here's the reasoning. Remember the Qs? I'm looking at the Qs and I'm saying, gee, I don't know, everything about it looks like it should be a D, but it really is only a C. And then I went back and I looked at the price of the 31st of October, October 2016, at 119.66, and then I looked at the price on in November, and I said, "Oh my goodness, I actually missed that. That is a peak B." But really, what the issue was is that in the context of the QQQ monthly, everything about it now points that that is exactly a peak D. And when I went to the NDX 100, which I hadn't notated for a little while, or renotated, I found that in fact it really was right there on the, in July of 2017, 5,995.77 and 5,995.45. I missed a fraction of your objective in the Chapman wave, and your obligation is never to miss a peak or a trough because you get a wrong count. And lo and behold, this is an E. And that's the reason why I think we're in for a fairly deep correction, maybe time and price. But I think it's going to be a bit of a surprise that all the news that comes out is treated as bad news in the tech sector. So that's the XLK, that's the QQQs, that's the SMHs, which were down. They're still down at 67, down 70 at 103.81. We've had a couple of shorts in this, not made very much because the one yesterday gapped down, took us out of our SOX S position. So it was unfortunate because then it just turned around and spiraled to the downside. But we've got good positions, so I'm not going to complain. We'll be back for the short because I do believe we've made. See this peak F, alternate count F/A in the weekly chart of the SMHs, and you see this leg C. I haven't been through it as carefully as the others. I'm going to go through it to see if I've missed something here because it was 43.53 was the low in June of 2015. 43.03 was the low of August of 2016. Wow, such a slight difference. I could have counted those as peaks and said that's just once in a while there's an aberration of the low being a tad lower. Let's go to John in Bethesda, Maryland. John, how are you? John, how are you?
Well, wait a minute.
Yeah, you are. You're on.
Hello,
John?
This is John.
Hi, John. How are you?
Okay, how about you, Basil?
I'm very well, thank you. You would
Good.
like to look at?
The SPY and the DIA.
All right, SPY and the DIA.
Yeah.
What?
I got it yesterday, and it's lower than what I have now, what it is now.
Okay, so wait, you went long yesterday?
Yes,
Which one, the diamonds or the SPY?
the both.
Okay, so what time did you get in?
Oh, well, it was kind of high when I got in.
Okay, so you got in after the
I got in
morning.
around, the diamond is around 243 and change, and SPY was around 266 and change.
Okay, so the SPY was 266 and change. Okay, so it's now down at 261.96. Well, let me do this. So was this a trade or was this a position play that you thought that we're going to go higher for maybe a couple of weeks? Or?
It's just a position trade, a short term.
So, okay, if it's a short-term trade, let me do this. So you're down about 4.5%, maybe 5% right now. So I'm going to say to you, I think from everything I'm looking at, the selling pressure is kind of done for now, based on my. I'm just going to show you in the Tigers in the Tiger TV. I'm going to show that I've got a leg C in the 10-minute chart of the E-mini in the Chapman wave, a leg C in the 5-minute. So this suggests that a chunk of the selling right now has been done, and probably you got end of the month buying coming in. So this is what I'm going to recommend to you. At least on a half a position that you've got right now, the SPY is trading at 262. I would make, let's see, it opened at 260 and the low was 258. So I'm going to say to you, on the position, if I'd done that, and I actually did get in for my subscribers yesterday, but we had a pretty tight stop, and it actually ran even higher after we got in. But I was remiss in the diamonds in the Dow saying if it rallies after you're in, usually I say raise the stop to the entry price, and for some reason I forgot to put it in, so we took a little bit of a loss. But now what I'm looking at is I think that this is a rally that could have some legs, at least as I'm looking at it right now. So it's a 262.25 on the SPY. I would at least make part of my position. I'd put a stop in of 260.10, and I'd let that position ride, and I'd just have like a trading stop and let it rally. And if by the end of the day, it's hard to say, but let's just say at the end of the day, instead of reversing back down, which is done for so many days lately, it actually rallies. That means that I would then say I'd make the one part of my position that I said was a stop now of 262. I'd raise that, and I'd have the entire position have a stop of 262 in the SPY. If you want to hold on, I'll talk to you about the diamonds. Do you want to hold on?
Okay, yes.
Okay, great. Folks, we're on with John. We're looking at the SPY, we're looking at the diamonds, and we'll talk about position trading and how you can raise your stop at least to protect yourself. I'll be right back. Guys, up on
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So we're on with John in Bethesda, Maryland, and we're looking at the SPY, which is the S&P Spider ETF 500 ETF, trading at 261.41. So, John, this is what I'm really looking at. The MACD, the movie in the daily chart, the MACD is very weak. Yesterday was the opportunity for the SPY to tackle the 9-period moving average of 265s and to actually try to hold and close near there, and today to follow through. There are many readings that are saying that the market is oversold in a certain context, but if I'm looking at one of the techniques that I like to use is how does the stochastic rally from the teens back over 20% to give you a really good torque, a kind of a buildup of power so that it can continue higher. And the stochastic's at 15%. I'm very nervous about that because it's using up oversold conditions but not responding the way it should. So that's why I'm saying to you, I wouldn't want to risk. You know, you got a 5% position, maybe a 5% loss right now. But if in fact there isn't a buying spree later on, and all of a sudden this thing goes down below 260, goes into 259s, yes, it could be making the arch formation of a lowercase h, and by tomorrow there could be a sudden kicker that says, wow, now it's going to accelerate right into early next week. But that's a lot of ifs. So I'm just saying, to protect your money part of the money management, I would have a stop on some of my position. And that position, I'd probably say I'd have half off if at any point today it goes to 260. Hey, it might go to 259. And this afternoon, suddenly there's a buying spree. And tomorrow you're looking at 265. And you say, oh, man, why did I do that? But my question here is, are you prepared? Because you've got two positions in similar indices. Are you prepared to see this go to 258 and then 257? And if it's a trade, I suspect you're not, because that's not what you were expecting. You were expecting today to be at least 1.5 or 2 points in the money, correct?
Correct.
So I always like to see, you know, I've got a philosophy that I've had for a couple of years now. I do this with my subscribers as well. And I say, you know what, if I'm wrong, I'm done. I'm out. I can always come back. I can make up 5% in a relatively short while. 12%, it just psychologically starts to get harder. So I'm saying to you, I would try to manage the trade with stops. I wouldn't be looking at how high will it go. I'm looking at how low will it go, because even now the S&P is only up 5. The S&P after yesterday's drubbing, S&P should be up more, and the QQQ, which is my focus as saying it's an intermediate term sell mode in both the daily and the monthly, it's dragging on the indices. So it might take a couple of days before maybe the Dow or the S&P can free themselves from the drag of the Qs. So I'm saying to you, for the diamonds, let me just go to the diamonds right now.
Could you recap the SPY again? Where should I put the stops again?
Okay, so the SPY, I would have a stop at least on part of my position at 259.98. Forget the round number, 260. Let's see if we, give it 2 cents below that.
Uh-huh.
And that's a stop. Personally, I would make it on the whole thing. But if you want, you can do it on half your position. And let's just say it's now 12:35 afternoon PM. Let's just say at 1:35, it hasn't gone anywhere. I'd not be very happy. But if it suddenly spikes to 262, 260, 262.50, I'd start to raise my stop on that position that we were just discussing. I'd raise it a point per point at this particular point. If it goes 262.11, I'd make my stop 260.98. You see what I'm doing? That's if you're around. If you aren't around, it's going to be a little difficult. Now, that's on the SPY. What you really want to see, and I'll go to the 120-minute chart. Let me just do that right now. That's going to help me. Yeah, this pattern that we're looking at here, it's gone to a peak B, and it's holding. The MACD is not bad on the 120-minute chart. The S&P is making higher levels, and that's saying, yes, I've got a slightly positive bias on this. It was a little too deep, the slide from today's high of 260. Was that today? 27th. No, today's high is the 28th. Today's high is 261.90. Yeah, that's not bad. Okay. So I'm looking at this and I'm saying it's going to happen within the next hour and a half. I want to see a move of at least a point in the SPY, and the diamonds, I would have a stop in the diamonds. It's trading at 239.45. I would put a stop 230. 236.95. Oh, sorry, that was a mistake. I meant 236. Wow, 3 points from here. I don't like to do that. That's too much for me. Okay, on the SPY, half my position stop would be at 238.20. Give it a little room. And now you say, okay, so that's one half. What happens if it gets taken out and I've still got the other half? I'm going to say to you, if it's weak over the next 2 hours, that's not a good sign at all. I'm inclined to say at least one of the positions I'd get out completely if they start to weaken over the next 2 hours. But at the same time, if they do start to rally, I'd only go one day at a time. Let's just say at the end of the day, the Dow closes up 163 points and the S&P closes up 10.30. Mm-hmm. And tomorrow, the futures are kind of mixed, and then you've got to report if there's a Thursday jobs report because Friday is closed. Let's just imagine that everything's good at the opening. I suspect there will be buying pressure for some part of the day. Then I'm going to say to you, raise your stop, and at the close of the day tomorrow, if it's only up a little bit, I probably would say, John, take off at least a third of your position in both of them. Now, what happens if it gaps down? You're kind of stuck, and that's the reason why I want to see some liftoff from here, so you've at least got a cushion. A 2% loss or 3% loss is a lot better than a 5 or a 7% loss. Why? Because we don't know what's going to happen at the open tomorrow. If the Qs are very weak, it could drag the market down, and the SMHs are not acting all that well. And that's the reason I'm looking to protect you in terms of your positions. So I'm saying, because it didn't do what you would like, cash is much better than looking at a loss. I'd build up that cash position of getting out of a chunk of it and saying, you know what, it didn't work. I'm lucky to have got out with a small percentage loss. I can always get back in. And what happens if you get back, if you get out and tomorrow it gaps up, Dow's up 200 points, S&P's up 20. You just have to shake your head and say, well, you know, I just had to protect myself. Your money doesn't know that it missed opportunity, but it will know if it's going down. So I'm just trying to protect you. So I hope that helps you in the way I'm looking at it. This pullback is a little deeper than it should have been today.
Okay. All right. Thank you, Basil.
Okay, I'll keep talking about it today and tomorrow in any case. So good luck with the trade.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I just wanted to follow up on John's call. I had a question with Dan, and it was a good question about whether I'm looking at, are you thinking that gaps cause more gaps like Monday, where it would be hard to get in or out? Basil. No, all I'm looking at here is the technical picture. Let me just show you this, because this is going to be part of what I'm discussing in my webinar a week from last night on Tuesday, April the 3rd, discussing the power of the peak D, what I'm looking for the markets over the coming months. But you see, look at this turnaround right here on the 9th of February. Look at the way the stochastic was flat, but then when it took off, the next day, look how that wide distance between the differential, the fast period moving average and the slow one was. And look at this one. This is struggling. It's starting to improve. It's at 19.23. It was at 18 when John called in. I want to see it up in the 21, 22%, and that'll happen if you can get your point higher in the diamonds and the SPY. It's the same thing. The SPY, look at this. No, the SPY is still flat. It's only at 16. SPY is not anywhere near as strong as the Dow. The Dow isn't that strong. So I'm just saying another point up in point or two in the SPY or the diamonds will already help the stochastic. The MACD is very, very poor at this particular point. So I'm just saying these are the levels I watch. This is what I like to do, whether it's trading the 2-minute chart of the E-minis or whatever it is, or a monthly. I want to see the power of that. Now we've got C's, peak C's in the 5 and the 10-minute chart. There's a real good chance that it's going to try to go above 26.3375, or there should usually be a good chance that you go to a D. That's the whole point of Ds in the Chapman wave methodology. It needs to get there. It's already done in the 2-minute chart. You've gone to a peak F. So that's a little bit more serious, and this is the longest consolidation we've had since the low was made at about 11:35 this morning. So just watch it, because the 2-minute can lead the others down, could also lead it up. So we're watching very closely. All right, enough with that. Let's go to the TLT. The TLT is the thing I'm missing here. See, this is a very strong move, 121.33s, and I'd say to subscribers to my opening call, if the TLT, if it goes to the 121s, that's where I have to start to consider that money's coming out of equities and going into the so-called safety of bonds. So we're watching this very, very closely. The TBT, which is the opposite of the iShares 20-year T-bond fund, this is the inverse, is on the way down. Made a peak C in the weekly chart, and now it's just kind of coming down. It's down a little bit more than it should be. It was in the 39s. Now it's in the 36s, and that goes together with the TNX. You see, now this is fascinating. I've got two out of three of the most important yields having made peak Ds in the or D or E in the weekly charts, and now pretty much consolidating. Here's the 10-year weekly, look, and the daily made that high. It was at peak E at 29.43 on the 21st. If you look at the FVX, which is the 5-year, it made a peak D. Long-legged doji breaks down, a peak E in the weekly, and it's saying it's going to consider. The one that's missing here is the TYX, which made a peak C, a clear peak C. There's nothing else, no other way I can count it, and it's having a big digestive phase, and that's saying we might look at time used up in the yields before we can actually rally. Question in the den is, let's see, how does flattening yields change risk and reward for TLT, that is bonds? Safety. No, I'm saying this is the traditional way of looking at the market. Is they always talk about the safety of bonds when stocks become volatile. That's what I'm saying. If there's a yield curve, there's I think it's like 50-50. How long does it take before the yield curve really impacts the market negatively? It could be instant, or it could be months. I've even heard of it being a year and a half. So I have nothing to do with that. I'm just talking about this shorter term thing that says to me from the QQQ, which is really important because this is what the world was focused on, the fantastic FANG stocks. And now those fantastic FANG stocks, as far as I can see, are all vulnerable to further declines. Google, look at Google. Google down from the 1177.45, Chapman wave 2-bar reversal at the peak D, back on the back in early March, peak E in the, no, that was the second time. First time was at 1186 on the 29th of January at peak F with a doji candle high, and it was a peak E in the, this is a down arrow. So I've got down arrows daily and weekly of almost all the FANG stocks. This is serious stuff. Even Apple, which, I mean, it's a mature company, but it squeaked to a new high, but it's only in a leg C in the monthly, but it's consolidating. So this consolidation, I think, can go for a little bit longer. So let me show you something else. The IYT made its high back, that was right here, at a peak E at 206.73 on the 16th of January. So 206 trading at 184. This is not good news. Look at the XAL. XAL is right here. XAL is down and made a peak C. Now, this is very unusual. Monthly chart, peak E. The daily chart, I've got a peak F right here at 124.44 on the 16th. And then what does the darn thing do? It goes to 124.21. So it misses by 13 cents. Is that 13 cents? I think so. Making a new high and rolls over. It's saying to me that the transports are all, there's a problem. It doesn't mean to say they're going to crash. It just says, I think they're in a trading band. Limited upside, probably now for this period, limited downside. XLB question came in. This is the one that really has me worried. S&P Select Materials Spider Fund, peak E. I have a sell signal coming up tomorrow if this closes somewhere around here. First time in years on the XLB monthly chart, ever since the height was made in February of 2015. That's 3 years ago. I had a sell signal at peak D. Now it's an E. And I'm about to get not a sell mode, sell signal. Starts off always only with a sell signal. And the weekly chart from the peak D made at 64.17 with the H pattern breaking and closing below the left side low. Not a good sign. Look at Home Depot. Home Depot trading right now up 1, way down at the bottom, made a peak F top in the monthly. I'm pretty sure that's a peak G in the month. So the weekly was a peak F, monthly peak G. Daily made a peak D. How many Ds have we seen? That's why I'm having this webinar on the 3rd, discussing what the implications are. What are the implications? Now I can talk about time frames. For the first time in years, I'm having a webinar where I'm actually going to be talking about monthly charts not being so good. Let me explain what I mean. First, let me see how many questions. I'll do Boeing. Yeah, let's do Boeing. Boeing is made a lower low today. Leg D on the downside. Peak D at 371.60, all-time high in daily. Peak D in the weekly at 371.60. Peak E in the monthly. I think that we're in for a deeper correction than a lot of people are expecting. It could be time, but I think it might be time and price. I'll be right back. Dow's up 106. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So an email says, you and many others have been taken by this market. Stop being rational. It will get you nowhere. Margin debt, which you seem to never talk about, and rising interest rates are taking this market much lower. We may well have seen highs. This could last for years. This is no market to overanalyze. No, I don't see it that way at all. I think whatever you're saying right now, those are things that I'm going to be bringing up more and more. But in the future, they are there and they are very important. I agree. But I'm not going to say that I can't ignore the markets, because every day there's money to be made and money to be lost in the market. But most importantly, it's identifying what you want to do and how you're going to do it. I was the one it's more than 20 years ago, spoke about the Japanization of our bond yields. If you talk about timing, back in 1983, I made the choice to get a home loan to use, not home, it's the card that you could get. What do they call it? They called it something, equity, home equity. That was the very first time they started home equity. I did not want to, when I moved from one place to the other, I sold one house, bought the other one. I only need a little bit, and I decided that I would get a home equity because I said that's the top for yields. So if you're talking about timing, that I think was perfect timing. And for years I've been talking about, as long as I'm here at TFNN, 13 years or whatever, I'm talking about the Japanization of our bond yields. Now I think we're in for something a little different. We're starting to see a rising trend, but we haven't broken out. But we have seen some kind of change. When you talk about margin debt, you wait. I will be talking about margin debt. I just don't think it's an issue right now. I think it is for the auto companies, but I don't think it is for much of else at this point. So we're about to wrap up. I'm just going to make it real simple. The Dow right now, got to be careful. Look, it's only up 55. When I see that there are oversold conditions in some of the technical indicators and they aren't able to really sharply move the markets higher, it says you're wheel spinning, you're using up much needed energy, usurping that energy. I'm just saying, be real careful. We are short. We have now, I think we have only one long. That's Bank of America, still just about to be taken out, I'm sure. But it's still long, still got a profit. And the short side is what I'm really looking at, and that's it. So I'll be talking about a lot more on this with my webinar coming up. Check the front page of TFNN. You can get my service for free with a money-back guarantee. Check it out. Tiger Technicians wrapping up.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.